Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so yesterday we talked about all the tests of the 200-day exponential moving average, 1, 2, and 3, and how things were going to react. Well, the bears have done a good job holding this area, stopping the upper band ride that had been going on for 4 sessions and bringing it back in. So what are we testing now? The 100-day, the 9-day, and the weekly pivot. So it's all coming together right here. So this has been a consolidation, little false breakouts, false breakdowns, a little more consolidation, although we really started to glide to the downside yesterday. Consolidated overnight. They brought it up into the 90 area, just enough to stop me out of my runner, and then brought it down to this 39, basically 13 to 39.15 area, which is likely where we're going to stay into the open. This is going to be a very short webcast because we open in 15 minutes. So the big issue today is, where do we close relative to weekly pivot? Do we get down a little deeper today and test the daily mid-band? I would say by the end of the week, if you're a bear, you want to be at this level or below this level by the end of the week. That would show a whole lot. That would show, look, the 200-day exponential moving average continues to be the end of the line on these rallies. These rallies continue to be sold, that we have all the same problems that we had before, and now not only are we living below the 200 and the 100, we're going to be living below the daily mid-band, which is the baseline square one dividing line between buy dips markets and sell rallies markets in the way that I evaluate them, and over the last 10, 12 years with a lot of success. So if you close below the green line, that sets up next week. You'll have a weekly pivot that'll probably it'll probably still be above you, but it'll be a heck of a lot easier for you as the bears to defend. If you're the bulls, you better hold it right here. I mean, you can give up a little bit. You can go down and test weekly pivot. And actually, if you can figure out a way to hold it here at the weekly pivot and the 9-day and the 100-day, and you can get back over that hourly mid-band at 39.63. You got VWAP at 39.47, proprietary moving average 39.35. So 35 to 64 is going to be a resistance area that the bulls are going to have to really try to tear through. I think they need news to do it. But if you can do it and close somewhere close to 4,000 today, certainly above the Globex high at 39.90, then at least what that looks like going into Friday is, okay, we had a little breakdown, tested weekly pivot, tested a lot of big areas. It's a higher low, and then you can start to build back up into those 4,000s. That, to me, is a lower probability outcome than what the bears have in front of them. But we'll let it play. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I'll talk to you tomorrow.